It is a quiet Tuesday afternoon in February 2026. Eleanor, a 72-year-old retired schoolteacher from Pennsylvania, is sitting in her favorite chair by the window. She is holding a piece of paper in her hand. Her glasses are sliding down her nose. Her heart is beating just a little too fast. The paper is a flyer she found in her mailbox. Bold red letters at the top say, "New $6,000 senior payment. Claim yours today." Below that, a phone number, and a warning that says, "Act before March 31 or lose your money forever." Eleanor's hands begin to shake. She wonders if this is real. She wonders if she missed something. She wonders if her neighbors already got their $6,000 check and she is the only one left out. She picks up the phone. She starts to dial the number. And right there, in that exact moment, Eleanor is about to make one of the most dangerous mistakes a senior can make in 2026. Because here is the truth, my friend. There is a real, brand new $6,000 benefit for seniors 65 and older this year. The government did pass it. It is in the official IRS records. It is signed into law. But it is not a check. It is not a payment that comes in the mail. And the people calling you, mailing you, and texting you about it are not the government. If you are 65 or older, or if you have a parent, a spouse, or a friend who is, please stay with me for the next few minutes, because what I am about to share could put real money back in your pocket, or it could save you from losing everything you have worked your whole life to build. My name is Artur. I am a senior policy analyst, and here on Senior Pension and Benefits Hub, my only mission is to translate the confusing rules of Social Security, Medicare, taxes, and retirement into plain, simple English, the way I would explain them to my own father. Today I am going to show you exactly what this new 2026 benefit is. I will show you who qualifies. I will show you how much it is really worth. And I will give you the 3 steps you must take this month to make sure you actually receive it. And please, please stay all the way to the end. Because there is one quiet mistake that millions of seniors are about to make this tax season. A mistake that could cost you over $5,000 across the next 4 years. I will reveal it at the very end. So please, get comfortable, pour yourself a cup of tea, and let's begin. Before I explain the rule, let me tell you about Robert and Margaret. Robert is 68 years old. Margaret is 67. They live in a modest brick home in Tennessee. They were married for 44 years. Robert worked as a postal carrier. Margaret was a nurse at the local hospital. Together, they receive about $4,200 a month from Social Security. Robert has a small pension from the post office. Margaret has a modest IRA she built up over the years. Their total income from all sources is about $78,000 a year. They are not rich. They are not poor. They are the kind of careful, hard-working Americans who count every dollar twice. In January 2026, Robert heard on the radio that there was a new $6,000 benefit for seniors. He told Margaret. She got excited. They imagined fixing the leaking water heater, maybe taking the grandkids on a small trip, maybe just paying off the last bit of their credit card. A few days later, a man called the house. He said he was from Senior Benefits Services. He said he could process their $6,000 senior payment quickly. He asked for Robert's Social Security number, his bank account number, and his Medicare number. He said it was urgent. Robert almost gave him the information. Thank God Margaret took the phone. She told the man she would call back. She hung up. Then she did something simple. She called the real IRS number, the one printed on the back of their tax return. And the IRS agent told her something that changed everything. There is no such thing as Senior Benefits Services. There is no phone call to claim this benefit. The man on the phone was a scammer. If Robert had given him those numbers, the scammer would have drained their bank account and stolen their identity within hours. But here is the second part of Robert and Margaret's story. When they actually filed their 2025 tax return correctly, with the new senior deduction, they saved more than $2,000 in real federal taxes. Real money, real savings, no scammer needed. So today, I want to make sure you get the same outcome Robert and Margaret got, not the loss, the savings. So what is this new benefit exactly? On July 4th, 2025, The president signed into law a piece of legislation called the One Big Beautiful Bill Act. Inside that law, there is a brand new tax benefit just for seniors. The IRS officially calls it the Enhanced Deduction for Seniors. Here is what it does, in the simplest words possible. If you are age 65 or older by the last day of the tax year, you can take an extra $6,000 deduction on your federal tax return. If you are married and both you and your spouse are 65 or older, your household can take $12,000. This is in addition to the regular standard deduction, and it is in addition to the older extra deduction that seniors over 65 have always received. So this is a third deduction, stacked on top of the other two. Let me show you the real numbers. For the 2025 tax year, a single 65-year-old can stack 3 deductions together: the regular standard deduction of $15,750, plus the existing age 65 addition of $2,000, plus the new $6,000 senior deduction. That is a total of $23,150 deducted from your taxable income before the IRS calculates a single dollar of tax. For a married couple where both are 65 or older, the total stacked deduction can reach $46,700. This is real. This is in IRS Publication 6142. It is on IRS.gov. It is confirmed by AARP. It is the law. But, and this is very important, it is not a check. It is not a cash payment. The government will not mail you $6,000. The government will not deposit $6,000 into your bank account. Anyone who tells you that is lying to you. What it actually does is reduce the amount of income the IRS can tax. For most middle-class retirees in the 12% or 22% tax bracket, the real dollar savings are between roughly $720 and $1,320 per person per year. For a married couple, that could be between $1,440 and $2,640 a year. That is real money. Not as flashy as a check for $6,000, but it is yours, if you claim it correctly. Now let me be very clear about who can use this deduction, because this is where many seniors get confused. To qualify, you must be 65 or older on or before the last day of the tax year. So for the 2025 tax return that you are filing right now in early 2026, you needed to be 65 by December 31, 2025. If you are 62, 63, or 64 years old and collecting early Social Security retirement benefits, I am sorry. You do not qualify for this deduction. AARP confirms that more than 13 million Americans collecting Social Security under age 65 are excluded. If you are on Social Security disability under age 65, you do not qualify either. It is strictly an age 65 and older rule. And there is one more important thing. This deduction phases out for higher income seniors. If you are single and your modified adjusted gross income is $75,000 or less, you get the full $6,000. If you are married filing jointly and your combined income is $150,000 or less, you get the full $12,000. But above those amounts, the deduction begins to shrink. It shrinks by 6 cents for every dollar you earn above the threshold. And once a single filer reaches $175,000, or a couple reaches $250,000, the deduction is gone completely. So if you are a single senior with $100,000 in income, you are $25,000 over the threshold. 6% of $25,000 is $2,500. So you lose $2,500 of the deduction. You can still claim $4,500. That is still real money, but it is less than the full $6,000. Please write this down, because this is the math the IRS will use whether you understand it or not. Now I want to address something very important, because in July 2025, even the Social Security Administration made a mistake about this. The SSA sent an email to millions of beneficiaries saying that the new law eliminates federal income taxes on Social Security benefits. That was wrong. SSA later corrected itself publicly. The truth is this: the new law does not eliminate taxes on Social Security benefits. The old rules still apply. If your provisional income is above $25,000 for a single filer, or $32,000 for a married couple, a portion of your Social Security benefits can still be taxed by the federal government. Up to 85% of your benefits can still be taxed. What the new deduction does is lower your overall taxable income. And in some cases, That lower income pushes you below the threshold where Social Security gets taxed. So for some seniors, yes, the indirect effect is that Social Security becomes tax-free. But not because the law says so directly. It is because your overall income dropped. I am telling you this honestly because I do not want you to file your taxes incorrectly. I do not want you to assume your Social Security is tax-free when it is not. The IRS will catch that mistake, and you will owe back taxes, interest, and possibly penalties. So what should you do right now? Let me give you 3 exact steps. Please pause the video if you need to write them down. Step number 1. Confirm your eligibility and your numbers before you file. Make sure you turn 65 on or before December 31st, 2025 for the current tax year. Then calculate your modified adjusted gross income. Look at your Social Security amount, your pension, your IRA withdrawals, your interest income, and your capital gains. Add them up. Compare that number to the $75,000 single or $150,000 joint threshold. This tells you whether you get the full deduction or a partial one. Step number 2. Claim the deduction on your federal Form 1040. The IRS has published a specific schedule for the new senior deduction. You can find it inside the official 2025 Form 1040 instructions, available free on IRS.gov. If you use a tax software program, it should ask you about your age and walk you through this automatically. But please, double-check. Many seniors miss this line in the first year of any new law. If you already filed your 2025 return and forgot to claim it, do not panic. You have up to 3 years from the original filing deadline to file Form 1040X. That is the amended return. You can still get your refund if you act in time. Step number 3. Get free, trusted help if you need it. Never give your information to a stranger who calls you. There are 2 free official government-recognized programs that will prepare your taxes for free. The first is VITA, the Volunteer Income Tax Assistance Program. You can call 1-800-906-9887 to find a free site near you. The second is AARP Foundation Tax-Aide. Their number is 1-888-227-7669. Both programs are staffed by IRS-certified volunteers. They are free. They are safe. They are real. The IRS will never call you, text you, email you, or send you a Facebook message asking you to claim this deduction. If anyone contacts you that way, hang up immediately and report it to the Treasury Inspector General at 1-800-366-4484. Now, I promised you at the beginning that I would reveal the hidden mistake, the one that millions of seniors are about to make this tax season. Here it is. The biggest hidden mistake is not understanding that this deduction expires in 2028. That is correct. The law currently authorizes this $6,000 senior deduction only for tax years 2025, 2026, 2027, and 2028. After that, unless Congress acts to extend it, the deduction disappears completely. Why does that matter so much? Because of how seniors plan their retirement withdrawals. Many retirees do something called a Roth conversion, or they take a large IRA withdrawal in a single year, or they sell stock with big capital gains. These moves often make sense for tax planning. But here is the trap. If you do one of these big moves in 2026, 2027, or 2028, you might push your income above the $75,000 or $150,000 threshold. That phase-out kicks in. You could lose part or all of your $6,000 deduction. And worse, that same higher income 2 years later can also trigger an IRMA Medicare premium surcharge. So a senior who thought they were doing smart tax planning could accidentally lose the senior deduction this year and pay hundreds of extra dollars in Medicare premiums 2 years from now. Over the 4-year life of this deduction, a single senior in the 22% bracket who fails to claim the full $6,000 loses about $1,320 every year. That is over $5,280 across 4 years. A married couple in the same bracket could lose over $10,500. Please, do not let this be you. Talk to a qualified tax professional or visit a free VITA or AARP Tax-Aide site. Plan your withdrawals carefully across 2026, 2027, and 2028. This window will not stay open forever. My friend, I want you to remember something. The government will not call you to remind you about this benefit. The IRS will not knock on your door. The Social Security Administration will not send you a personalized letter. This deduction exists. It is real, but it only works if you claim it, and it only works if you understand the rules. That is why I made this video, not to scare you, not to sell you anything, but to give you the truth in plain English, exactly the way I would explain it to my own grandmother. So here is what I am asking you to do today. Do not rely only on YouTube notifications to stay informed. YouTube changes its system constantly. Sometimes my videos do not reach you, even if you are subscribed. So please, take action right now. Hit the subscribe button below this video. Then click the little bell icon and select all notifications. That way, the next time a Social Security rule, a Medicare rule, a tax rule, or a pension rule changes, you will hear about it from me first. And if this video helped you, please share it with someone you love, a neighbor, a brother, a sister, a friend from church, someone who might fall for the scam phone calls. Your one share could save them thousands of dollars or save them from a stolen identity. Leave me a comment below. Tell me your state and your age. Tell me if anyone has already tried to scam you about this $6,000 benefit. I read every single comment, and your story may help another senior watching this video tomorrow. From all of us at Senior Pension and Benefits Hub, thank you for trusting me with your time today. Stay strong, stay informed, stay protected, and remember, your benefits belong to you. You earned every single dollar. Now let's make sure you keep every single one. This is Artur. I will see you in the next video. Take care of yourself, my friend.